fact that I can take what I've been doing for 20 years or so, take some notes, and kind of just share my thoughts. It's actually very helpful for me. It allows me to kind of tie everything together in the morning versus, kind of over the day or over the full day like I used to do. So, first up, today's going to be a pretty special day for me for a couple of reasons, just so you know. One is we're heading up to Fresno to do a ribbon cutting at the hub. You've probably heard me talk about it on this channel a few times. It's actually a office building, small office building. It's about 7 or 8 offices that I purchased, remodeled, and now have staffed or have full with real estate entrepreneurs, really with the sole idea of having a one-stop shop for investors, sellers, buyers in Fresno. Fresno clearly has been special to Olivia and I, and if I could create a place that could help people in the future, that would be great. Again, nobody there is an employee. I don't have a company. I don't want any of that stuff. They're literally real estate entrepreneurs, licensed agents, licensed contractors. They run their businesses there, but they're also there to help you as an investor. If you're looking to buy, if you're looking to sell, you're looking to learn. Um, I've been lucky enough to attract really solid individuals and companies. So we're going to go have a ribbon cutting. And then also at 9 o'clock, I'm going to go wire some money and buy 2 more properties. One right out of the MLS. The short story there is it was listed for 125. I offered 80. They countered it at 100. I accepted. And then the second one was actually a lead that was sparked from the first Fresno education session we did in November. Somebody had a line on a troubled property, brought it to us, and we are going to be closing on it. And we're also going to be paying that individual $5,000. If you follow me on Instagram, I might have put it on Facebook too. We're paying them a $5,000 finder's fee, which is always fun to hand out and do all of that. So pretty cool day. But on to the topic at hand, the financial news. As I promised yesterday, we're going to see plenty of head fakes, and it's interesting. There was an article out early before the market opened that the U.S. might be looking to delay tariffs on December 15th. No real sources were cited or anything, and not 45 minutes later or an hour later, there's another article coming out saying, you know what, investors don't believe that other article. So I'm happy about that. These are all just head fakes from people out there trying to get their pennies and nickels and trying to scare people, or it's why I don't play in the stock market, because there's just so many games that can be played with emotions, and I'm a rather emotional person, so I don't have any money involved, so it's fun theater to watch every day. So at the end, I really see no reason for the U.S. to delay. Right, we're clearly in a strong position. That jobs number last week, low rates, strong dollar, all of these things kind of point to why would we delay the tariffs on Sunday. That said, I see a lot of upside for the current administration in signing something. Right, there's stuff going around him for other stuff that is causing distraction that is just not needed. So doing something that would go top of fold and inking something would be a pretty good idea, I think. And we can all just move forward into the end of the year, celebrate the holidays and New Year's, and just get into 2020 and see what happens. So I don't give any credence to that one article. No real sources were cited on either side. Why would we delay? We have a compelling event. When you have a compelling event, you hold out as long as you can. So that's that. Also, next up, there's actually likely to be a trade deal done in December. It's just the North American trade deal, which is U.S., Mexico, and Canada. That is pretty cool. The article I read said it could be inked and agreed by December 18th, which is pretty awesome. This is something that, if you remember, I think it was like almost 2 years ago or 18 months ago, we kind of backed away from. But again, it was negotiation we backed away from, and it looks like we're coming forward with something that would be pretty cool. The U.S. exports a lot of stuff to Canada and Mexico, so getting a trade agreement with our closest trading partners would be beneficial for all parties involved, I am sure. Next up, looks like there's some really shocking stuff I read this morning. Credit Suisse actually said that the Fed is going to launch QE4, which stands for Quantitative Easing 4. Some people call it money printing, basically to stem the cash crunch that happened last month in the repo market. We talked about it a little bit on this channel, but basically the Fed had to come in and um, basically bail out the repo market because interest rates spiked to 10% one of the days. And Credit Suisse is basically saying there's something wrong. Nobody knows what it is. The Fed's going to have to print money into year end. So we will see. Some would actually argue we're already in QE4. It's already launched. It's already running. Right. The Fed has already cut back buying. Kind of reducing its balance sheet. However, again, Credit Suisse is saying that they could come back in a big way. So could be interesting. Uh, then we got a couple of just totally reverse calls. UBS is coming out and saying the Fed could cut rates twice next year. And when I see stuff like this, I go, what is their motivation? There's lots of rumblings about UBS being in trouble. Obviously, a lot of presence, I believe, in Europe. Um, you know, it, I certainly don't see how we cut rates twice next year. Uh, Again, if you just play the calendar out, right, the Fed typically needs to see negative stuff for a while. So we're probably through Q1. There's really nothing set up to make Q1 bad, so we're into Q2. And then I really don't see the Fed, again, historically speaking, raising or lowering rates into the second half of 2020 because they do not want to look like they are impacting our presidential election. And whether they cut or raise, they could, at least in principle, by some be seen as impacting the election, which they will not do. So the Fed would have to cut rates twice in the first half of 2020 if you believe UBS and this kind of call. I think it's crazy talk, but it's always interesting to read what other people disagree with you. I do that often because again I'm wrong, and it's interesting to see what other people see. So that's kind of cool. Then there's market bull Tony Dwyer. Not a name I recognize, but I remember reading the article and was like, oh, he's been around for a while. But he's actually saying, again, reverse of what UBS is saying, is he is saying that the Fed won't raise rates for years. If you were to ask me what's more likely, the Fed cuts rates twice next year or the Fed doesn't raise rates for 2 or 3 years, I'm on that don't raise rates. I mean, rates could be down the whole next presidential cycle, which is 4 years. So I think there's a lot of debt out there. There's a lot of things we got to pay for. It's easier to get done when rates are low. I mean, if rates doubled or tripled, we'd have a problem paying our debt. So I just don't see that going anywhere. So I think there's going to be a lot of noise about what's going on next year. I think the U.S. economy is going fine. I think the consumer is fine. Just on that aspect, something we're starting to see a lot of recently is cash out refis. This was something that was huge in 2006 and 7. People were treating their houses like ATMs and just taking cash out and doing trips and cars and silly things like that. It has really not been a huge trend the last 11 or 12 years. However, the past 3 quarters, cash out refis are up 24%, and homeowners have taken out a whopping $36 billion in equity. That's the highest it's been in the last 12 years, and it's something to watch. Again, some of this is because they can actually be lowering rates, taking some money, and actually paying the same or less. But it's interesting to watch, and a trend that if it kept going for another year or two would absolutely be a problem and could be, could grow into something like 06, 07. But again, too early to tell. But cash out refis are up, and again, this is helping consumers, right? They're taking the money and in theory putting it in the bank, and they're in theory putting it back into the economy. They could be paying off other high interest rate debt. They could be paying for college. Who knows what's going on? But again, cash out refis have grown 24% and a whopping $36 billion in the last 3 quarters. So again, just more signs that the consumer is okay. I saw an article that said Tesla was a faith stock, and I honestly had no idea what a faith stock was. It's a new term, or at least a new term to me. And so I had to click on the article and see. Again, basically, what it was saying is people are such a believer in Tesla and Elon that they are willing to hold on through nearly anything. And faith stock seems to be an appropriate name or title or what indicator, because a lot of people that respond to my videos when I talk about Tesla certainly believe and have faith, and so have some very colorful commentary. So it is interesting to see, and if that's true, it becomes one of those stocks. Why would you ever quote unquote short, right? If you have a huge amount of believers on the other side, they're not going to be taken out by some short position. So it's just interesting to see. And again, why I don't play in the stock market, because having faith in a company or an individual is, at least a human being, is not really where I want to put my money. And then last up, we have SoftBank. You remember we talked about SoftBank a bunch with WeWork. They took a huge write-off from that investment. They've also had a losing investment in Uber as far as valuation goes. But they have cut ties with WAG. WAG is a dog walking company who has another unicorn stock, with huge valuations. And they have sold their position back to the company at a loss. They have given up their board seats, and now WAG, the company, is struggling to survive. They've laid off 80% of their employees, and they are looking to sell, likely to a pet store, to keep the company going and keep the app going. Because, as you know, you've seen on this channel, I have a dog. Actually, I had two. One passed away this year, unfortunately. But I have a dog, so I'm a huge proponent of WAG and what they do, because it helps match dog walkers and the like. So, in the end, today's going to be a great day. Heading out to Fresno for ribbon cutting. Going to be closing or wiring funds for 2 purchases. I expect them to close today, but sometimes they get delayed a day. But we'll have 2 new projects this week. Also got great feedback on that how to make $1 million wholesaling video yesterday. So thank you for that. I'm glad you like it. It's really how I broke down anytime I had a quota. It's not about the quota or the goal. It's about the leading activities and indicators up front. Because if you get focused on the goal, it'll be too late in the year to realize you're behind. But if you break it down to the activities, you can get early indicators that you're falling off or missing something, and you could tweak early. It's really just an early indicator. And again, it's something I've used to help people have record years and the like. So hope you enjoy that. Today's going to be a great day. And of course, have fun. Take care. Bye.